Okay, stand by. Go sound. Okay, and go stay.
C3, take 1. Okay, energy. Woo!
Okay, great.
Yes, love this. Happy New Year, okay?
BWF Borwen 1.
I'm Olivia Higgins, and welcome to this episode of Playing with Fire. You've seen him for our lunch and learn sessions and also our offline events for options trading. Today we have Borwen Neo, the program head from the Next Level Academy. Hi Borwen, tell me about yourself.
Hi, my name is Borwen, and thanks for really having me here. Alright, so at the Next Level, what we do is we actually bring everyone finances to the next level, and we actually specializes in stock investing as well as option investing as well.
Great stuff. Now you know about market situations, right?
Yep.
So today's episode, it's about taking charge of your game plan for 2023. And this is about re-strategizing and rethinking your portfolio because markets, we don't know where it's going. And I think it's important right now to talk about what they can do and also learn from you as an expert today.
Wow, that's amazing. Happy to share.
Yes. So what can you tell me about, the current market situation and what's in your portfolio?
Right, so I think this question is perfect though. I love it because why? I think we are at the start of 2023. What is going to happen in 2023, we will disclose later on. But what is in my portfolio? Maybe I'll just share. I am actually having a balance of cash as well as stock in my portfolio. So even though, I do a lot of options, but as of now, I have to say that, I'm actually having more stocks as compared to options. And there's a reason, later I'm going to share a little bit more. So in terms of percentage, why I am actually about 60% vested, close to 60%. Yeah, because why? I think it's very important for us to consistently stay invested, irregardless of market condition. But what am I going to do with that 40% cash? Okay, I think there's an opportunity that's heading
That's
up.
the question on everyone's minds, right?
Yes.
What do you do with the remaining part?
That's right. And of course, maybe in terms of what is in my current portfolio that is currently invested. So I'm actually heavily more invested into some of the more traditional and more well-known stocks. So for example, things like Apple, TSM, Nvidia, and I think one of the most controversial stock right now, and that is none other than Tesla.
Okay, so in terms of the quality investments, because that was a talking point last year towards the end, what can you tell me more about that and how that is related to your portfolio?
Now looking back, going for all the consumer defensive stock would definitely be one of the best investment that we would actually want to invest back last year. At that point of time, I think everyone focus was more on the growth stocks, which again, now looking back, that's probably one of the not so good decision that we might want to go in last year. And that is also one of the reason why I think in my current portfolio, what I really want to have as of now is really solid companies that has a very consistent stream of earnings as well as cash flow. So some of you might be wondering, why do I not have some of the more high growth portfolio?
You asked my question for me.
Yeah,
so why not?
Because I am actually looking at that, but I think at the current point of time, especially where there's a lot of news that we are moving into a recession, so I think those are the companies that we might want to go in when the economy starts to stabilize. End of the day, we look at opportunity cost. When the market starts to recover, I would say that those that are relatively solid and blue chip will actually start to go up first, followed by some of the high growth company which we have invested previously. I think probably in the next 6 to 1 year, I think those company I will keep them in my watch list, but I'm going to slowly invest when their financials show me better cash flow.
Yes, and we always talk about this, right? Long-term investing.
That's right.
And when you make a choice, it's also about studying and doing your research. And you can also do that a lot on the Mumu app, looking at the balance sheets, making sure that, you track the analysis and where it's going before you make a decision for yourself. Now, we talk about last year, this year, last year a lot. Tell me, what does a game plan actually mean for the new year?
Right, so having a game plan, basically you need to know exactly what you want to buy. I think first thing first, do you have a watch list? So for myself, I always have a list of stocks that I am consistently looking at. That's number one. Number two, at what price point should I enter? Should I enter now, or what price should I enter later on? Then of course it's very important for you to have a game plan, and know how to actually remove the emotions. Because when you have a game plan, you remove the emotions.
Absolutely. I think that's so important.
Alright. When it comes to selling away the stocks, we always go back to the fundamental.
But it's hard to tell, right? The market's being swayed in any kind of direction, and it's the uncertainty and volatility that are key characteristics at the moment from what we see.
Yep.
Can you tell me more about, how can you plan according to quarters and earnings expectations?
Right, so of course, coming into the first quarter, we have already seen that many of the companies, especially in the last quarter of 2022, they have already reduced the guidance of, coming into 2023. That is not really a good start, for 2023. But I think having said that, while we can actually look at some of the earnings guidance for moving forward, but ultimately, I think it still goes back to the most fundamental, and that is great companies. I think they will be able to actually withstand even a recession. Like for example, in the defense, aerospace, and some of the pharmaceutical company, I think those are not that much affected by some of the earnings. Recently, I think this morning I just saw one of the news on Goldman Sachs. The earnings was way lower than expectation. So again, is that a bad news? To some, it might be a bad news, but to many, it could also be an opportunity for us to take advantage of.
Talking about the news of such companies having, the cuts on jobs, right, and employment levels. Now, for this year, what would you say would be the primary indicators to decide on whether or not to invest in a particular company? Does it matter if they're doing the cuts, or is that an opportunity?
I think first thing first, when it comes to employment, right? Of course, to many, unemployment rate, if it's high, is definitely bad news. But unfortunately for investors, to a certain extent, it's actually a good news. When a company actually starts to have certain retrenchment, it means that they are finding ways to reduce the expenses. Right, and of course, cutting manpower is one of the fastest and the most direct way to actually help the company cash flow to become positive and even generate more cash flow and even profit in the future. Now, having said that, I think unemployment rate is definitely something that we want to look at. One indicator that I would look at in terms of the more macroeconomic is actually more on interest rate. Right, because we all know that in order for the economy to grow, we need to have savings. When people start spending, the whole economy will start growing. And what happened is that when interest rate continue to rise, and we know that it is still on the rise, people's spending are actually getting lesser and lesser. And I just take a look at one of the indicators that shows the amount of personal saving that the average US citizen have is actually at one of the lowest point. So that to me is quite an alarming figure to look at.
So in Asia right now, how do we compare and how do we position our portfolio if we're investing in Singapore, for example, and trying to implement all these strategies for 2023?
I think in Singapore, the good thing is we are in a safer space, but at the same time, I would say that things are getting a little bit delayed. So for example, if you look at if the US market were to take a dip, then of course the following day you start to see the Singapore market would also follow suit as well. Most of the job loss will probably start in the US first before coming to Singapore. And I think Singapore, we are a place where we attract a lot of the tech companies. I think even in Singapore, we do see that there are some of these jobs being cut as well. So I think for most of the jobs out here, we are still pretty safe. But of course, some of the higher paid, especially in the tech sector, I think they will actually take the biggest hit, especially in Singapore.
I saw a consistent trend with the experts towards the end of last year on how Asian markets are highly resilient. Now, do you have anything to add to that?
I mean, I totally agree to that as well. I think in terms of local company and a lot of the Singapore company, I think in terms of the growth that we are looking at, we are definitely more conservative. When we are more conservative, it also means that our upside is going to be slower. But at the same time, when things starts coming down, it's going to have a lesser impact as well.
Right. So by conservative, do you mean that we're more risk adverse?
Yeah, I would actually say that. Yeah. And I think in Singapore,
kind of like a value system, right, within every society, right?
Yes. Yeah. For example, in the US company, a lot of them actually massively use that to grow the company.
Yes.
I think
okay,
in
that's a good
Singapore,
point.
a lot of the company, they want to make sure that they have the cash before they actually grow.
Right.
So if your company has got low debt, I think in the current market situation, it's going to be a lot safer as well.
Okay, next question is very important. So you've already highlighted the core of this year, the game plan, the strategy, and what to look out for. Now, since it's still uncertain, we don't know what to do. What can you say for these groups of people to help them? So, for example, with young parents.
Right. So first we have to understand for young parents, what they probably do not have that much is time. If you ask me, I think everyone should actually start investing. Especially with inflation going up, we know that our money is actually being eroded on a day-by-day basis. So investing to me is a necessity, is something that everyone must do. But how can young parents actually start investing without having to monitor that much? I think first thing first, go for the more well-known and established company. Right, so of course you can reference to my portfolio, but again, okay, you have to do your own due diligence as well.
Yes.
So company like, for example, I love to invest in things that I personally use, things like Apple, and why I love, for example, like Microsoft, Google, and all that, because these are products that I personally am very, very familiar with. Right?
Okay.
So I think
So that was your personal preference, and you're
Yes,
familiar
that's
with
right.
those, and so you believe in the value of investing in
That's
those
right.
companies, right? Okay, great. What about young active investors? People in their
People like
early
us?
20s? Yeah,
Oh.
people like us.
Okay, early 20s. Definitely, I think if you are young, one of the things that you should not focus on is dividends. Because when I first started, I invest a lot into dividend company because, when I first started reading on investing book, that was one of the type of investing that I should go for. Now that I look back, I invested a lot in dividend stocks, but if I had invested into growth stocks, at that point of time, my portfolio will probably be way bigger.
And at what age did you start?
I started investing at 21.
Okay.
And I think I started with a lot of online, like online blogs and following some of the YouTubers and stuff like that.
Okay, what books were you reading?
I love this book, this series called The Little Book of Value
I have
Investing.
to go check it out. I
Yes.
love reading.
Yeah, I love the way it makes complicated things easy. So I'm a very simple person. I like simple things.
That's how it is, sometimes you need to take the most, complex topic or concept and try to target and make it
That's right.
simplified for people to understand. Like today's episode, right?
Yes. Keep it simple and effective.
Yes, always good. Now, the last group I would like you to share your insights for are the retirees. Now, what would you say they should look out for current market conditions?
Right, so I think for retirees, capital preservation is one of the key things that definitely we are looking at. Now, of course, opposite to what I've mentioned earlier on, I think dividends is definitely one of the instruments that they probably want to look at. Number one, because it's relatively safer, and number two, because of the income that they are able to generate. One of the things that we do is using options to also generate cash flow. For retirees who wants to look into diversifying their portfolio and generating cash flow, I think this will be one of the method that they can look at, because it's also one of the method that Warren Buffett used as well to generate cash flow.
It's great that you mentioned that, because in December with Chloe Lin, we covered a series of options masterclass, right? So do check it out if you're interested to get to know more on the introduction course regarding this. And of course, I'm sure, Borwen, we will also have more episodes with you regarding
Definitely.
options and also other strategies, right? Okay, so talking about dividends and also the age gap for that 21-year-old you and also the retiree watching this episode. Now, what is that one mistake that you would like to share that you made when you were younger, and what would you do differently right now at this age?
When I first started investing, one of my biggest mistakes was actually to leverage. Right. So I still remember my first year of investing, I generated extremely good returns. I generated more than 100% through trading.
Okay.
Right.
Trading.
Yes, through trading. Yeah, I was doing scalping.
Okay.
So swing trading. Yeah. But what happened is that I was making money, but I didn't actually know why I make money. So I thought that I was one of the best investors at that point of time.
Don't we all?
yes, until the market decided to go the other direction,
Yeah.
like what happened right now. So everything starts to go into the negative zone. And because I was doing leverage, so I actually got a margin call at the point of time, which also means that my portfolio literally got wiped out. Yeah, so I think for the younger investors out there, one of the things that we want to do is to grow our portfolio fast. But I think without the correct guidance and knowledge, it can be very, very dangerous as well.
Right, and how you think about it, you have your own core value system, but then also like what are the mechanisms you have in place? What is your strategy going into planning for the future?
Very importantly, right now, I am actually starting to accumulate even more shares. All right, so another thing that I will be also doing is once the macroeconomic, especially when I mentioned interest rate as well, once it actually stopped increasing, I think that is also a very, very good indicator that potentially indicate that the market has reached the bottom. Right. So I think with that, of course, we also look at some of the other technical indicators that shows that the market is actually in a bull market. So I will also be changing my strategy from stock investing and diverting into options investing to actually supercharge my portfolio. Right now,
Supercharge
yes,
is
that's
the
the
word
key.
you use. Okay.
Right now, I want to accumulate great company.
So how do you foresee that now? Like what are your indicators to foresee, a pending crisis or, your next step?
Of course, recession is something that I'll be looking out for. A lot of people thought that the best time to invest into the market is after the recession because that's where economy is picking up, everybody is doing well.
There is that potential rebound to look out for.
However, when we actually look at real data, we also realize that market actually bottom in the middle of a full recession. So when things seems to be really, really bad, actually that is one of the best time for us to jump into the market as well. When there's a lot of news on recession and things like that, that will be the time where I will pretty much be almost fully vested into the market.
You mentioned helping people supercharge their portfolio. What would you say Mumu Singapore and Next Level Academy are doing this year to further strengthen this component?
Number one is definitely to educate the public in terms of proper stock investing, and I think there's a lot of different perspective about options. Options is a tool, and how do we use the tool correctly? Now, I think having said that, we talk about the platform. I think why we actually are here together with Mumu is because we want to make sure that we have a platform that is very, very easy for anyone, especially beginners, or even some of us who are more experienced to be able to leverage on this platform to really gain more knowledge. And really, this is the place for us to execute our trade as well.
The community is so important, and it's about investing, not alone. We want to do it together as a community and help each other through this process. Now, we've got some community questions.
All right, sure. I love that.
It's hard to define what retirement is, especially someone living in Singapore all of my life. Now, things are getting more expensive. How can I help myself get closer to the retirement age at this point in current market conditions?